Well, before we continue with the show, for our DSTV viewers, we're going to join a live coverage now in Adamawa State, and that's the REA State-to-State Roundtable Engagement. That's for the Rural Electrification Agency State-to-State Roundtable Engagement. But this continues on all other platforms. That's Business Morning, but that's for our DSTV viewers. But for our next conversation now, definitely we're looking at Nigeria's supply chain. We've had rebased inflation, and we brought our inflation numbers from a massive over 34% to about 24%. And we're also expecting rebased GDP numbers. That's for the Nigerian economy. We had the last one for Q4. It wasn't rebased, but it showed growth there for the Nigerian economy. What's X-ray now? What's playing out? And innovations coming up in Nigeria's supply chain. And we have to discuss that. Oluwatoyin Olaoye is a Chief Risk Officer at Vendor Credit. Great to have you on the show. Good morning.
Good morning, Vladdy Williams.
Yeah, so it's great to have you. So now we're seeing the data that's for January, the first inflation data for January with the rebased basket, which has brought down inflation to about 24.48%. And I'm wondering how this impacts, how you do business at this point. Is it something that's rosy, for you? Because it's a big drop. Some are saying don't call, this latest inflation number, a drop. But how does it really affect, Nigeria's supply chain?
Thanks again, Ladi, for having me on. Okay, so just to put a caveat there, the MBS has clarified that that's decline from 34.8, I think, to 24.4, right? Does not reflect a decrease in the general price level, right? They've just attributed the drop to a new base year. So what we've seen across the board is that inflation has continued to climb sharply, right? Despite, and this is obviously due to the moves by the current administration with regards to ending subsidy and which has led to spikes across board. So things like prices of goods and services and generally led to difficulty across board for consumers. What we've seen in supply chain industry is there has been a rising cost of goods and services, so higher input costs, reducing purchasing power, imported inflation, given Nigeria is largely dependent on imported products, right? We've seen in inflation that has spiraled because of this. There's also been disruptions in logistics and transportation. So across the board, we've seen fuel price volatility, right? Delays in bringing in goods from the ports, and then rising warehousing costs. So these are just a few things that we've noticed, right, so far since inflation has died so early. And obviously, the hope is that as the administration continues to do things to bring inflation down, a lot of these costs that we're seeing that have spiraled will also come down.
Right, and definitely we're hoping for lower prices that we can actually feel the impacts at when we go to the markets. But it's all about what happens going forward. With this inflation data, it's rebased at this point. But it's not about this data that we're seeing right now. But what are you expecting going forward? And when it comes to the impact of inflation on, operations and, profits, what are you seeing going forward? Do you think inflation will tend upward, as we go along with this rebased data?
The idea is that it would flatline, right? The expectation and the rule of thumb for most people going through inflationary pressures are that you tighten the belts. Everyone knows that. So we expect that a lot of companies, right, and a lot of industries who are in this space will then also retweak their strategies so that they can also help the consumers alleviate the pressures of inflation. So certain things like pricing strategies, right, you might see a value based pricing or tiered pricing, depending on the product. A lot of companies will also be doing a lot of cost management. So things like cost analysis, supplier negotiations, diversification of suppliers also, right? So if they used to get their inputs from a particular supplier, right, you might now see a ask for a wider array of suppliers who can probably provide these inputs at a lower cost or at a competitive cost, basically.
And also, talking about the impact of energy, we've seen energy costs. That's talking about PMS, where we're seeing some kind of, downward play. When it depends on which refinery, you're getting fuel from, at this point. But do you see that as a bright spot, when it comes to Nigeria's supply chain, with what we've seen so far? Playing out with PMS, even though the prices are still quite elevated, we're seeing some drawdowns, here and there, depending on which filling station you're buying from.
I think the advent of private refineries is a good what's the word to use, is a good harbinger for the industry as a whole, right? What then happens is that because of competition, right, a lot of people will be trying to get market share. And due to this competition, consumers will get the best. And so you would continue to see that for retailers or for marketers of petroleum products who want to sell the products and want to attract more customers to their depots or their filling stations, right? That reduced price will now become the name of the game. And so they would use that to funnel more people. And by that, well, a lot of people would then be able to take advantage of these prices. What we've noticed in Nigeria is that a lot of the times when these prices go up, they hardly tend to come down, right? The hope is that with reduced petroleum prices, and petroleum prices in Nigeria generally affects everything across board. So, from the price of food in the market to school fees, you'll be surprised what even people that sell yam will tell you is because of fuel price and all of that. So the hope is that with more competition in that space, more modular refineries coming up, more price drops in fuel, right, we'll see a downward trend in the general inflationary trend.
All right, talking about the inflationary trend there, we're seeing the central bank, they had their first rate setting meeting in 2025, and it was a hold. I'm guessing, analysts were quite, it was some kind of consensus, that, after the rebase data, the MPC, they would definitely hold to, understand what's really playing out so far. But the rates are still quite elevated. What are you seeing, when it comes to supply chain credit? How are we seeing, or have, investors or participants been able to absorb this high interest rate environment, and maybe the whole, there's some kind of relief?
So what we've generally seen is that due to these rates, right, there has been reduced liquidity in the markets, right? So it's been more difficult for businesses to access credit from your normal providers of credit. So I'm talking about the banks or merchant banks and investment house. So we've seen an upsurge basically of private credits, right, where people are, as opposed to giving loans out, right, at an annual rate, people are looking at supply chain cycles and saying, I can, lend you money over the period where you need to fulfill your order that comes in. So we're looking at anything between 60 to 90 days cycle. And so what you see there is that because of the inability to access credit from a lot of the major financial institutions, private credit has come in, and that is where actually vendor credit, plays a pivotal role. We can look at providing credit, at reduced rates, right, that sort of match your payment cycle in such a way that you are not left out of the market and you're still able to provide services as much as possible.
All right, definitely we'll keep seeing to see how what plays out when it comes to interest rates, going forward. But, let's talk about innovations now, because, definitely we know situations can be tight, but those kind of tight situations somehow, bring innovations. What trends are you seeing so far when it comes to supply chain management in Nigeria?
So the major one that would jump out is B2B marketplaces. A lot of companies are sort of eliminating the middleman, right? So you see direct business to businesses from where manufacturers are going directly to the providers of inputs where they need particular inputs. You also have that in the digital marketplaces where platforms can help small businesses source goods directly from manufacturers, as opposed to having a middleman who would be in charge of transportation, which also adds an added cost. So what you see now is platforms are, helping businesses to get directly from manufacturers, right? We've seen embedded finance solutions, right? Supply chain fintechs such as ours, right? We offer those working capital facilities for people. So not just working capital, invoice discounting, LPOs. And with that, you are able to, you're able to meet up your orders as much as possible without having to worry about when next they are going to pay you or if the payment is going to be delayed, because that source of funding is also there. There's been an upward trend in the use of technology, AI, right, to analyze historical data and predict demand. This has come in handy, right? A lot of the tools that we have now, and a lot of the major players have tools that are helping us in this space, to analyze this data. So you talk of Claude, you talk of OpenAI, even Google's Gemini, right, plays a significant role in helping us do this. We've also seen localized sourcing and manufacturing. Previously, where people were going out of the country to look for raw materials, right? Nigerian companies have started looking inwards, right? And I've also done some of them have done some backward integration to ensure that their inputs are sourced locally and on time so that there is no break in their manufacturing processes. And then we've seen instances where there have been collaboration and shared infrastructure where businesses are trying to reduce overhead costs by collaborating with businesses who are in the same sector, right? And that has helped across board. So, for example, is a company like Shuttlers in mobility, where they sort of do like a cab share, or you can say a bus share for companies or for people who are going in the same direction. E-commerce financing, right? Companies like Konga who have embedded financing onto their platform. So where vendor credit is their major finance, and then the providers of the products on Konga can access financing so that they can stock up on their products and then be able to sell at a higher rate than before if they had to go to the banks. So those are some of the things that we've seen in the industry so far, and it looks like as people continue to innovate, we're going to see more and more of these strategies come out to play.
All right, definitely be looking out to see how they come out and navigate most of what's playing out in these economies, especially in Africa, with high interest rates and a weak currency. Definitely not easy to navigate all of that. But thank you so much. That was Oluwatoyin Olaoye, is the Chief Risk Officer at Vendor Credit, joining me from the UK. Thank you so much for coming on today.
Thank you very much, Ladi.